Want to talk inflation?
Sure, let's move on.
Yeah. Inflation report comes in better than expected. The Consumer Price Index, also known as CPI, showed headline January inflation was just 2.4%. Quite the number. Now, this compares to an estimate of 2.5% in last month's reading of 2.7%. Core CPI, which backs out food and energy, came in line with expectations at 2.5%, but was also lower than December's reading of 2.6%. And I love this number, and the smallest increase since March 2021, when it was just up 1.6%. That's a low number.
A low number, and this is before the whole inflation spike. This is even before transitory inflation. I mean, this is, again, about 5 years ago now.
That must be COVID. When did COVID was it?
COVID was 2020, but really that inflation onset from all that money that came in, inflation started to climb in April of 2021, and then it really climbed up to 8-9% on the headline.
And I think that was because the government gave all this free money for people, and there's just too much money chasing too few goods. So had they not done that, probably inflation would have not spiked to where it did.
Definitely not the way that it did. Yeah. Looking at food prices, though, they did put a little pressure on the headline number as they were up 2.9% compared to last year. Most of this, though, came from food away from home, where prices were up 4%. And food at home, on the other hand, only saw prices climb 2.1%. And I bring this up because, again, this is indicative in my mind of a strong economy. We got the jobs numbers. We're not addressing that today, but it was a very good jobs report with 130,000 jobs created in the month of January. But food prices away from home, that's going to be your restaurants, your bars, things of that nature, they would not be able to raise prices and still garner the type of tourism to their respective businesses without a strong economy. So this, to me, is still bullish about how well the economy is doing.
You know, one thing that doesn't show that I learned in the past, I think we talked about recently, was a thing called shrinkage, where you go to the restaurant and you would get before maybe a 5-ounce piece of meat. Now you might get 4.5 amount, or you might get fewer potatoes or something. I mean, they're kind of shrinking the plate to not change the dollar amount you're paying, which doesn't show up on the food side. And I think that is happening going away from home. And away from home just obviously means eating at restaurants, you know. And I think they combine all the restaurants, fast food, regular food, everything. Yeah. So
away from home.
Away from home.
Not in your house.
Not in your house. Does that mean if you go to McDonald's and pick up the take it home, then it's
home? Away from home.
Because you got it away from home. Exactly. Energy prices helped the headline number as prices declined. Love this, 0.1%. As gasoline prices fell 7.3%. I don't think that happened in California. I don't know. Offsetting this benefit was utility prices, where electricity was up 6.3%. And I don't know if it's from the cold back east and the south, I guess they had, but utility gas service, well, that was up 9.8%. So that really took a big hit on the energy side.
Yeah, and we pointed out in the newsletter this week, again, got to get the newsletter if you don't, but we talked about electricity prices, that they're actually double about inflation right now. And I do have concerns that electricity prices are continuing to be a headwind as we move forward. I mean, the data centers, there's some real big problems there, and how that could impact consumers on an everyday basis. And this is one area of the inflation report that I want to keep an eye on, because I think electricity prices, you could still be seeing these big spikes for potentially years to come, depending how this AI build-out plays out. But many other areas, they did see muted price changes. Shelter, though, continued to add pressure to both the headline and core CPI numbers. Even though the annual rate of 3% was lower than December's level of 3.2%, it is still above both the headline and core numbers. As a reminder, this is a huge weight at around 34-35% of headline CPI and over 40% of core CPI. So essentially what I'm saying here is shelter's at 3%, headline's at 2.4. Anything that's above headline means that's pushing up the headline number. If shelter all of a sudden were to flip and go lower, that would benefit your overall inflation rate.
You know, just make a quick comment on the energy side as well, because we talk about, and again, you talked about getting the newsletter, because there's something on there about data centers and the big demand for electricity. They're pushing out the price of all electricity. We talked about, for them, they need to come up with a separate way of billing them, because it's not fair that the consumer has to pay all this higher prices because the data centers that are just absorbing, taking all this electricity. It is going to be a problem down the road, and I think right now consumers are going to pay for it. So hopefully something will come out. I know, like on my personal water bill, the more I use, the more I pay.
Yep.
So maybe they need to do something like that, like a tiered amount for businesses. And again, we're pro-business, but the data centers just absorb so much electricity, so much power.
Yeah, I mean, it's scary.
Yeah. Well, back on the shelter, if all else remains the same and shelter declines this year, I believe we could see that 2% target achieved. I was surprised to learn that the owner's equivalent rent, which is OER, which essentially measures the rate homeowners believe they could rent their house out for, carries most of the weight at over, this is crazy, 70% of that shelter category. In January, the OER was up 3.3%, while the actual rent of primary residence category was only up 2.8%. That what people think they can, people are always way over. Oh, my house is worth $1.2 million. Oh, I could rent my house out for this. They're way overpriced. I don't know who in the government came up saying this is a good thing. Let's see what people think their house is worth renting at. They're always going to be high.
And most people don't even know. They're like, oh, my house is worth $1 million. They then can't comprehend how to adjust that into a cash flow measure of what they could rent it out for. Now, some people, they have rentals, so they'd have a better idea. But your everyday person, they don't have any idea. I'll be honest with you. I have no clue what I could rent my house out for. I haven't looked at the market for rent. So why, if somebody calls me to ask, how much can you rent your house out for? I think $5,000 a month. Oh, okay, that sounds great. We'll pencil that in. What? That makes no sense.
Yeah, I mean, the consumer, the homeowner, 80% of them, I think, have no real clue what their home is really worth rental-wise. That's why it's such a crazy number. And it counts for, what, almost 70%?
70%.
Over 70%, I think it was.
And I think of the entire CPI, I think that part is almost 30%. I think it's like 27% of the entire index is the owner's equivalent rent.
I think we need to go to D.C. and kind of set them straight. It's like, this is a crazy CPI number. Because I think if it wasn't for that, we'd probably be the target amount. Because, yeah, food was up somewhat, actually energy was down, some things are up. But to count this much, it just makes no sense. I don't know when this changed, but it's just...
I think it was like in the 80s.
Was it in the 80s?
I want to say, because I think before they had the median home price,
Right.
But that was so variable. So they tried to smooth it out. But now I think they've distorted the number. And, if you look at median home prices, I mean, those are only up, I think, like 1-ish% now year over year. We're not really seeing big home price appreciation. And also, too, we talked about the national median rent for apartments. They actually fell 1.4% in the month of January. And they're now actually 6.2% below the peak in summer of 2022. So we've seen a decline here in actual apartment rents. But we're still getting 3% inflation numbers on the shelter index. There's just a big disconnect in my mind. And I think there is a lot of credence now to some Fed officials saying, well, I think inflation isn't really the big concern any longer.
Right. And people say, oh, things are up. And yeah, things are up. But again, the inflation numbers, I think they're overstating things, which is not a good thing. And all this information does come from our website, as we said, smartinvesting2000.com.